Hello. Hi. Welcome back. So today we are discussing the different types of the fair value gaps. We have the bullish fair value gap, which is made up of three consecutive candles, whereby they do not overlap. The candles themselves, the wicks, they do not overlap. Now, the bullish fair value gap, we look at the high of the first candle versus the low of the third candle. There must be an imbalance, a price imbalance in between. Now, in this scenario, what we are having here is a good example of a BC. A BC is when you see a very big middle candle. It's very visible to the eye. You can never miss it. Now, this is called the BC. Now, BC stands for buy side imbalance, sell side inefficient. As you can see, we don't have balanced sellers in this market, so that's why we call it that. And then in the second scenario, we have the bearish fair value gap, whereby we look at a downtrend. We have three consecutive candles, whereby we look at the low of the first candle versus the high of the third candle. And then in between, there is an imbalance, a price imbalance, which when you go back to the charts, you'll notice that this might be a very big candle, and we call this CB. Now, CB stands for sell side imbalance, buy side inefficiency. So what do you expect? Every time you see this kind of formation, price will always come back to the fair value gap and then move towards your intended direction. That is after you've noticed a change in of character, right? So I'll take you back to the chart so that we can look for such formations. I'm looking at the USD JPY. Let's try and spot the CB and the BCs, the three types of the fair value gaps, of which I can see one right now. So we have this. We have this is a downtrend. We know this because we have this change of character right here. And then we have a three candle formation, one, two, and three. And then we look at the high of the first candle versus the low of the third candle. So this is a good example of a bearish fair value gap, of which is called the CB. Yeah. So let me change this color to something like this. So what happens once we had a change of character right here? Let me try and indicate that change of character. Price came down and then tried to rebalance this fair value gap. Price came back to the fair value gap and then dispersed downwards towards the intended direction. And then in this case, your take profit level should have been this, could have targeted this low. This is a sell side liquidity, and this was a perfect trade if you entered from the fair value gap. So usually after a change of character, then price forms a fair value gap. Price will always come back to rebalance that, then move towards your intended direction. So this is where you're supposed to take your trades from. Now from here, you can actually check out this fair value gap. Um, and for this big bearish fair value gap, you can choose to pick your ruler and try to map out the center of that ruler and make it straight. Then this is what we usually call the consequent encroachment. Consequent encroachment. encroachment. So once price enters your fair value gap, you draw your consequent encroachment, and then you expect that the candles in the fair value gap will respect this consequent encroachment. The bodies of these candles, they do not cross above the consequent encroachment, but instead it's only the wicks, meaning there's a rejection there, and there's a high probability that price is going to move towards your intended direction. Now, this is a good example of a bearish fair value gap. Now, let's look for a bullish scenario. Now, in a bullish scenario, let's see. Let's look for one. We have one right here. So, in this case, you have to ensure that the trend is actually moving in one direction. So we have this as our change of character right here, the swing high that broke the body of the candle right there. Then we have this as our break of structure. We also have this as our break of structure, this right here is our break of structure. And then we have these three candle formation. We have 1, 2, and 3. It doesn't matter the size of the candle or the color of the candle. As long as they're in a bullish scenario, you can consider this to be your fair value gap. So I'm going to draw this from the high of the first candle versus the low of the third candle. And as usual, this is where you expect price to come back and pick your more orders and then move towards the intended direction, as you can see. So we have this candle right here and price respected that. And also you can choose to pick your consequent encroachment. You pick that, you pick your ruler and try and divide this into two equal halves. um my bad. Pick this, draw with your ruler, come back with your trend line and try to divide this by 2. And look at that, the bodies of the candles, they really respected that consequent encroachment. And even after so price entered my fair value gap and then went towards my intended direction. So yeah, that's the lesson of today. Thank you guys for watching.